We actually see it the other way around. First, we're delighted to report an outstanding 2017 result. Earnings growth, EPS growth approaching 29%, and industry-leading medical cost trend below 3%, and then put forth an outlook for additional growth in 2018 of 7 to 8% revenue and 19 to 23% earnings growth. As it relates to the changing marketplace, we expect to continue to see employers demand more from a service standpoint, as well as demand more from their coworkers or employees to engage. And that actually fits exactly what Cigna does as a service provider. So not an ASO claims administrator, but as a service provider of clinical programs, behavioral programs, pharmacy programs, et cetera. So we see more opportunity than not in the change.
The market seemed to think otherwise. Your stock, I think, was of all of the names out there, perhaps the largest percentage loser. What does the market have wrong here in terms of concerns about your competitive stance if and when this effort begins to bear fruit?
Yeah, I'm not sure. I wouldn't say what the market has right or wrong. I think we have to put it in context. For the 6 years prior to 2017, we delivered in excess of 30% TSR on a compounded basis. For 2017, we delivered about 50% TSR, and we'll step into 2018 with very strong results. Clearly a disruptive headline and clearly a need of creating clarity in terms of next steps. I think the question fundamentally for everybody in the space is, can you grow? Can you continue to innovate? And can you continue to deliver strong value? And we put forth an outlook for 2018 that indicates all of the above. So we're confident in the fact that we'll continue to grow the business and be rewarded by shareholders over time.
You know, I reported on, I think it was Monday or Tuesday when this came out, that it's early days for it. Any thoughts on your part about reaching out to them, trying to actually be a part of the effort?
Oh, we have ongoing dialogue. So we're one of JP Morgan's service partners to start with. So we have ongoing dialogue with JP Morgan on a regular basis. You could assume that those conversations transpire on a regular basis, including this week. Secondly, more broadly, if you were to look at our strategic position, our number one strategic imperative is to be the undisputed partner of choice. So not only can we will. We partner with a variety of players, whether it's in the pharmacy space, our employer clients, our physician partners, and our hospital partners. So we do see this as an opportunity, and we're in the middle of that conversation, as you would expect.
You share that contract to provide JP Morgan with services with UNH, and Piper Jaffray estimates that if JP Morgan actually pulled that contract, it could be 0.2 to 0.4% of 2018 revenues for you. Have you actually, because you said you have ongoing conversations, have you asked JP Morgan if they intend on pulling the contract? Do you have any sort of commitment from them that they are not going to do that in the near term at least?
Yeah, I actually don't think about it that way. Every employer and every customer has an individual choice at any given point in time. We view it the exact opposite. We have the responsibility to continue to re-earn the opportunity to serve our clients and customers each and every day. We support about 20% of JP Morgan's business today, and we're delighted to do so, and we're delighted with the services we provide to them, and we continue to invest from an innovation standpoint. I think if you look at it bigger picture, we're a growing U.S. health service company. We're a growing U.S. seniors service company. We're a growing U.S. productivity company. And we have one of the most diversified global portfolios of health services to be able to continue to grow our company.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.